Australia's biggest supermarket chain, Woolworths, has just revealed results that have left investors uneasy. Sales are up, but profits are sliding fast. Between rising costs, worker strikes, and fierce competition from Coles, the grocery giant that once dominated Australian shopping is now fighting to win back trust. Before we dive in, a quick reminder that subscribing is completely free, but it truly helps us keep bringing you stories like this one. Your support means a lot. After what it called a disappointing year, Woolworths reported a 2.7% lift in first quarter sales, reaching $18.5 billion. The gain was mostly thanks to a 13% surge in e-commerce and a small rise in food sales, up just over 2%. But when cigarettes were excluded, food sales rose a healthier 3.8%, showing that shoppers are still spending, but carefully. New CEO Amanda Bardwell said the results still missed internal targets, noting, "While our Q1 sales performance was below our aspirations, customers are beginning to notice the changes we are making to improve value, convenience, and availability." Even Big W, long considered a weak link, managed a 1% sales increase thanks to stronger clothing sales. Bardwell said the company is cautiously optimistic heading into the Christmas season, with plans for a refreshed holiday range. But behind the cautious optimism, reality bites. A day after the report, Woolworths faced shareholders at its annual general meeting, where Chair Scott Perkins admitted that recent performance fell well below expectations. He told investors, "Neither your board nor the management team is satisfied. We took our eye off the ball during a period of dramatic change, and customer trust was impacted." The company also took a $100 million hit after a 17-day worker strike and continues to lose ground to rival Coles, which recorded 3.9% growth this quarter, outpacing Woolworths. Perkins said Woolworths is now adapting to the new normal of intensified competition, while Bardwell pointed to cost of living pressures as a major factor shaping how Australians shop. Many households are cutting back and chasing bargains more than ever. Earlier this year, Woolworths reported that profits fell 17% to $1.39 billion, despite total revenue rising to $69.1 billion. Underlying profits dropped 19%, mostly due to weak performance in its food division. Discount retailer Big W also swung from a $14 million profit to a $35 million loss. Still, Bardwell insists the company aims to return to profit growth next year by simplifying operations, improving value, and rebuilding customer trust. The AGM wasn't without controversy. Woolworths again faced backlash over farmed salmon sourced from Tasmania's Macquarie Harbour, an area linked to the endangered Maugean skate. Some shareholders slammed the chain for continuing to label its salmon as responsibly sourced, while Coles quietly removed that claim. More than a third of shareholders voted for Woolworths to better report the environmental impacts of its seafood sourcing. Chair Scott Perkins responded that the company relies on data showing skate populations are recovering, but added, "If the evidence changes, so too will our position." So while Woolworths may have nudged sales upward, it's clear the road ahead is tough, with falling profits, public criticism, and a stronger Coles all turning up the heat. For now, the supermarket giant's biggest challenge isn't just selling groceries, it's winning back trust from Australian shoppers.